Hello traders, Gary Wagner here, just about 10:40 in Honolulu, 3:40 in New York. It is Tuesday, February 2nd, 2016, and this is the Daily Report for Gold and Silver. After trading for the better part of the trading session last night and the morning, we do have gold moving from negative to positive territory, although in essence unchanged. We are looking at green, with gold currently trading at 1128, 1129 in that area, which oddly enough is right where gold opened, which is 1128.21. Now the high today has been 1131 and the low 1122.54, and as I said, currently trading at 1128 and change. So traders, on a technical basis, there's absolutely a couple of interesting things that we want to look at, specifically in terms of what our long-term trend could be and where the market sits in terms of that. Now, the chart that I've just pulled up, it is a daily chart, standard candlestick format. The interesting thing is on this chart, I have basically two moving averages. The first moving average is a 200-day moving average, and that, of course, is this blue line right in here. The second of these moving averages is our 50-day moving average. So we're looking at not only the long term, but the shorter term in terms of potential trend. Now, obviously, as this marketplace came down, we saw it hit a bottom at around 1050. But on a technical basis, it really wasn't until it really went through this particular trend line right in here, our 50-day, that we could really extrude from the information that we were absolutely in a much more bullish stance. Now, the rally, which took us from about, call it 1070 right here, the second component of this rally, up to its current place, which is at around, call it 1127, 1128, 1129 in that area, needs to breach 1132. And that is our 50-day moving average, because the big picture is that any commodity that we chart that is over a 200-day moving average is absolutely on a bullish trend. It's not a bull correction within a bear market, but on a bullish trend. You cannot make that statement unless you actually get above a 200-day moving average. And lo and behold, we are right there. And that, to me, in terms of technical information, is about the most exciting thing I have seen in gold in quite some time. And to really grasp the importance of that 200-day moving average, what I've done is basically compress this daily chart so that the candlesticks are almost indistinguishable, but what we're looking for is price action relative to the particular moving averages that we're looking at. When we do that, you can see that with absolute certainty, once this market back in 2009 right here crossed over and began to trade above this moving average, right as it moved here, we had a defined trend that kept it above that moving average throughout the rise to its dramatic high at 1920, and then it oscillated, obviously, as we had the market run into a very narrow range in between, call it 1534, that's the bottom levels of these markets. Those are the lows that I recall, and about 1800 on the highs. And you can also see that reflected within both moving averages, in that sometimes you have this market trading above and sometimes below, sometimes above. What that tells you is you are transitioning really from a bull market here to a bear market here. That's what we saw up on the top, if we look at it in that way. Now, we have challenged this 50-day moving average to no avail on at least 1, 2, 3 occasions. We have flirted with this level on another couple of occasions that came in following these little blips that came above it. But for the better part, since 2013, which is when the market finally dropped below this price point here, which is at $1,500 price point, And you can even make a case for 1600, obviously. But ever since we had this cross right here, we have been really under extreme pressure, and we have seen this market go through 2013, 2014, 2015, in essence, for the better part, the majority of the year, trading below, definitely trading below. So the fact that we are once again in a position, and that's all we're at right now, is in a position to see some sort of a turnaround, we have to get that turnaround, first cross over this particular moving average right here, which is our 200-day, and we're certainly getting close to that. So for that reason, I do have a reason for some tepid optimism, but optimism nonetheless in the gold market. Now, of course, we are long from multiple points. Our stops are at 1107. Maintain your current long position, maintain your current stop. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.